Let's talk to Ishaq Siddiqui, market strategist of the financial company ETX Capital, joining us live from London. Take out the Olympics, which clearly brought quite a bit of money to the UK economy, and are things as good as they look when you see the figures for the first time?
Yes, they are. If you look at what the expectations were for around about a flat or even a contraction, the fact that we can say confidently that the UK economy grew about 0.3 to 0.4% underlying growth rate, outstripping the exceptionals being the Olympics and Paralympics and the Jubilee weekend, we have seen an improvement in the UK economy. So overall, a very encouraging result. However, it does come with major concerns about what's going on in the global economy, especially the slowdown in emerging market growth and the European debt crisis, which hampers the growth prospects for the UK.
So does that mean that the worst is over, or could we see something different when it comes to fourth quarter figures or perhaps the beginning of next year?
No, we caution that the worst is not over. We have to bear in mind that unwinding of the Olympic effects, the fact that we have a deep, prolonged recession in the Eurozone. Yesterday's German data, IFO and PMI manufacturing and services data indicated that the Eurozone's largest economy is now feeling the heat. All suggest that the near-term prospects for the UK economy are quite dim, and we may even see a slowdown to about 0.2% in the fourth quarter, and even a contraction. However, we'd like to think that the people in the city right now are quite optimistic with the results.
Yeah, well, what's it going to mean on a practical level?
Well, that means on a practical level, when you look at stock prices right now, there wasn't much of a reaction on the FTSE, but we saw a big swing up on on sterling, a bit more buying on that side. The overall picture for the UK remains that inflation is down 3-year lows, retail spending is higher, and unemployment is ticking up. So there's reason to be optimistic. But again, the overall picture, when we see what's going on in the outlook, it does hamper what sort of upside we have. So that is one thing to keep into consideration.
And Ishaq, if inflation's down, if the economy is growing slightly, it's all encouraging. Does that mean the banks are going to be more inclined to lend money? Does that mean, therefore, that big projects such as construction will tick up a little bit, that everything could start to sort of, if not green shoots, then sort of tiny little ones?
Yes, I mean, when you look at the construction side of it, today's report did reveal that it was down 2.5%, which was not one of the bright spots of the overall outcome. So that would suggest that it's going to be a very slow return to construction growth. In terms of banks and lending again, we've seen a very strong result from the financial sector from the US with their reporting season so far, and we've seen a similar sort of result from the European players today, Credit Suisse. The overall conditions and liquidity seem to be ticking up. We do have strong measures intact by the Fed with their QE3, and we also have the ECB who are yet to launch their bond buying program, which all bodes well for increased lending as early as next year. But it is much dependent on market conditions and the overall improvement in the global economy.
Well, I thank you very much indeed for that, Ishaq Siddiqui, talking to us from London.